Bitcoin will fail. I've heard it 1,000 times, 10,000 times. From journalists, from economists, from Nobel Prize winners, from central bankers, from billionaires, from my own friends and family. Bitcoin has no intrinsic value. It's too volatile. Governments will ban it. It uses too much energy. It's for criminals. It's a Ponzi scheme. It's a bubble. It will crash to zero. I've heard every argument, every criticism, every reason why Bitcoin can't possibly work, won't possibly last, and will inevitably collapse. And here's the thing. I used to make some of these arguments myself. In 2013, I went on Twitter and said that Bitcoin's days were numbered. I said it would suffer the same fate as online gambling, regulated into oblivion or collapsed under its own contradictions. I was so confident, so sure that I understood what this thing was and why it would fail. I was wrong. Spectacularly, embarrassingly wrong. And that experience taught me something valuable. Being smart doesn't make you right. Having credentials doesn't make you right. Being confident doesn't make you right. The only thing that makes you right is actually understanding what you're talking about. So today, I want to do something different. I want to take the strongest arguments against Bitcoin, not the weak ones, not the straw men, but the real arguments that intelligent people make, and I want to address them directly. One by one, with logic, with data, with reason. Not because I want to convince you to buy Bitcoin, that's your decision, but because I think you deserve to hear both sides of the argument laid out clearly so you can make an informed choice. The critics have had their say. Now let me respond. Let's start with the most common argument. Bitcoin has no intrinsic value. The argument goes like this. Bitcoin is just code. It's zeros and ones on a computer. You can't eat it, you can't wear it, you can't live in it, it doesn't produce any cash flow. It doesn't pay dividends. It's not backed by anything. Therefore, it has no intrinsic value and its price is pure speculation. This sounds logical. But let me ask you a question. What exactly is intrinsic value? Think about gold. Gold has been considered valuable for thousands of years. But why? You can't eat gold either. You can't power your car with it. Yes, it has some industrial uses, but those uses account for maybe 10% of gold's value. 90% of gold's value comes from the fact that humans have agreed it's valuable, from the fact that it's scarce and durable and pretty, from collective belief. Is that intrinsic value, or is that just value? Now, think about the dollar. A $100 bill is a piece of paper with ink on it, or increasingly it's just numbers in a database somewhere. What's the intrinsic value of that paper? Maybe a fraction of a cent. The rest of its value comes from the fact that the government says it's worth $100 and most people believe them. Is that intrinsic value? Or is that just enforced belief? Here's the truth that the intrinsic value critics don't want to grapple with. Almost nothing has intrinsic value in the way they mean it. Value is what people are willing to pay for something. Value is determined by supply and demand. Value is a collective agreement, not a physical property. And a value is about what properties an asset has that people find useful. Then let me tell you about Bitcoin's properties. Bitcoin is scarce, not sort of scarce like gold, where miners keep finding more. Absolutely mathematically verifiably scarce. 21 million coins forever. No one can create more. That's a property. That's valuable. Bitcoin is durable. It doesn't rust, doesn't decay, doesn't degrade. Information stored properly can last forever. That's a property. That's valuable. Bitcoin is portable. You can send $1 billion across the world in minutes for almost nothing. Try doing that with gold or real estate. That's a property that's valuable. Bitcoin is divisible. You can buy 100 million Satoshis, or you can buy one Satoshi, perfect divisibility, down to 8 decimal places. That's a property That's valuable. Bitcoin is verifiable. Anyone can verify that their Bitcoin is real in seconds. No experts needed, no trust required. That's a property, that's valuable. Bitcoin is unseizable. Held properly, no one can take it from you. Not governments, not banks, not thieves. That's a property, that's valuable. When you add up all these properties, you have something that's never existed before in human history. A perfectly scarce, perfectly durable, perfectly portable, perfectly divisible, perfectly verifiable, perfectly unseizable asset. And you're telling me that has no value? Let me flip the question around. What's the intrinsic value of the dollar? The dollar is infinitely inflatable. The government can and does print as much as they want. The dollar is constantly degrading. It's lost over 95% of its purchasing power in the last century. The dollar can be frozen, confiscated, controlled. The dollar requires trust in institutions that have repeatedly proven untrustworthy. If Bitcoin has no intrinsic value, then the dollar has negative intrinsic value, and at least Bitcoin doesn't actively get worse over time. The intrinsic value argument isn't really an argument about value. It's an argument about unfamiliarity. People don't understand Bitcoin, so they say it has no value. Just like people in 1995 didn't understand why a website could be valuable. Just like people in 2005 didn't understand why a social network could be valuable. Give it time, understanding will come, and when it does, the no intrinsic value argument will seem as quaint as saying the internet has no intrinsic value because you can't hold it in your hands. The second most common argument, Bitcoin is too volatile. It's not a real investment because real investments don't drop 50% in a few months. Let me start by acknowledging something. Yes, Bitcoin is volatile, extremely volatile. It has dropped 50% multiple times. It has dropped 80% twice. If you bought at the top of 2017 and sold at the bottom of 2018, you lost a lot of money. That's real. That's painful. I don't want to minimize it, but I want to challenge the assumption behind this argument, the assumption that volatility equals risk. Volatility and risk are not the same thing. Volatility is how much the price moves up and down over short periods. Risk is the probability that you permanently lose your capital. A stock can be extremely volatile and still be a great investment if the long-term trend is up. Amazon dropped 95% after the dot-com crash. If you had sold at the bottom, you would have said Amazon was too risky. If you had held for 20 years, you would have made 200 times your money. Was Amazon risky or was it volatile? Those are different questions. Now let's look at Bitcoin through this lens. Yes, Bitcoin is volatile on short time frames, but what about longer time frames? If you zoom out and look at any 4-year period in Bitcoin's history, it has been positive. Every single one. If you bought Bitcoin at any point and held for 4 years, you made money. Often, a lot of money. The crashes that the media loves to report on are dips in an overall upward trajectory. Bitcoin crashed from 20,000 to 3,000 in 2018. Devastating, right? Except now it's at 100,000. That crash was just a waypoint on the journey upward. This is what people miss when they focus on volatility. They're looking at the waves and missing the tide. Yes, the waves go up and down, but the tide has been rising consistently for 15 years. Now let me ask you about a different kind of risk, the risk of holding cash. Cash isn't volatile. Your bank account doesn't swing 50% in a few months. It feels stable. It feels safe. But what's actually happening to your cash? It's losing purchasing power every single day. 3% a year, 5% in a bad year, 7%. If you count the things that actually matter, like housing and education and healthcare, that's not volatile. That's just a slow, steady, guaranteed decline. So, which is riskier, an asset that swings wildly but trends upward over time, or an asset that feels stable but is guaranteed to lose value? Most people would say the first is riskier because it feels scarier. But feelings aren't facts. The math says holding cash is one of the worst things you can do with your money over long periods. Here's my perspective on volatility. It's the price of admission. You don't get 100x returns without 50% drawdowns. You don't get to buy an asset that goes from $0 to $1 trillion without experiencing gut-wrenching drops along the way. The volatility and the returns are part of the same package. If you can't handle watching your investment drop by half, you shouldn't invest in Bitcoin. But you should also ask yourself, if I can't handle volatility, how am I ever going to build significant wealth? Because all real wealth building involves accepting uncertainty and riding out storms. The volatility will decrease over time as Bitcoin matures and gets larger. It's already less volatile than it was 5 years ago, but it will never be as stable as an asset that's guaranteed to lose value. And I'll take the volatility over the guaranteed loss any day. Next argument. Governments will ban Bitcoin. They'll make it illegal. They'll shut it down. They'll arrest anyone who uses it. This argument seemed more plausible 5 or 10 years ago. Today, it looks increasingly detached from reality. But let me address it anyway. First, let's talk about what banning Bitcoin would actually require. Bitcoin is a decentralized network running on hundreds of thousands of computers in every country on Earth. There's no central server to shut down. There's no company to sue. There's no CEO to arrest. To ban Bitcoin, you would have to ban mathematics. You would have to ban cryptography. You would have to ban people from running open source software on their own computers. You would have to prevent people from memorizing 12 words in their heads. How do you do that? How do you stop someone from having a thought? Some countries have tried. China has banned Bitcoin multiple times. Each time, it continued to exist. The network kept running. People kept using it. The hash rate dipped temporarily and then recovered. You can make something illegal, but you can't make it impossible. And Bitcoin is designed to be impossible to stop. But here's what's really happening. The trend is going the opposite direction. El Salvador made Bitcoin legal tender.
The United States approved Bitcoin ETFs and is creating a strategic Bitcoin reserve. European regulations are providing clarity for Bitcoin businesses. Major financial institutions are offering Bitcoin to their clients.
The world is not moving toward banning Bitcoin. The world is moving toward embracing Bitcoin. Why? Because of game theory. Imagine you're a country. You have two choices: ban Bitcoin or embrace it. If you ban it, what happens? Your citizens who want Bitcoin will find ways to get it anyway through VPNs, through travel, through peer-to-peer transactions. You won't stop them. You'll just push the activity underground. Meanwhile, Bitcoin companies and Bitcoin talent will move to other countries. You'll lose the innovation, lose the tax revenue, and look foolish when Bitcoin continues to thrive despite your ban. If you embrace it, what happens? Bitcoin businesses set up shop in your country, talent moves there, tax revenue flows in, your citizens get access to a new form of financial technology, and if Bitcoin continues to appreciate, your country benefits. Country A bans Bitcoin. Country B embraces it. Where does the capital flow? Where does the talent go? Where does the innovation happen? This is why we're seeing a race to embrace Bitcoin rather than a race to ban it. Countries are competing to be Bitcoin friendly because they understand the game theory. Banning Bitcoin is a losing strategy. Could some countries still ban it? Sure. Some already have. But those bans have been ineffective at best and counterproductive at worst. And the overall trend is unmistakable. The world is moving toward adoption, not prohibition. The government will ban it argument made sense. when Bitcoin was small and obscure. Now that it's a trillion-dollar asset held by major corporations and sovereign nations, that ship has sailed. This is the argument that frustrates me the most. Bitcoin uses too much energy. It's bad for the environment, it's wasteful, it's irresponsible. Let me start with some facts. Yes, Bitcoin uses a lot of energy. The Bitcoin network consumes roughly as much electricity as a small country. That's real, that's significant. But let me ask you some questions. How much energy does the traditional banking system use? When you add up all the bank branches, all the ATMs, all the data centers, all the armored cars, all the security systems, all the office buildings, all the employee commutes, how much energy is that? Estimates suggest it's far more than Bitcoin uses. How much energy do Christmas lights use? Roughly the same as Bitcoin. How much energy does air conditioning use? Orders of magnitude more than Bitcoin. How much energy does Netflix use? A significant amount. Why is Bitcoin's energy use uniquely problematic when so many other things use comparable or greater amounts of energy? The answer is that energy use isn't inherently bad. We don't criticize hospitals for using energy. We don't criticize farms for using energy. Energy use is only bad if it's wasteful, if the energy is being used for something that's not valuable. So the question isn't, does Bitcoin use energy? The question is Bitcoin's energy use worth it? And to answer that, you have to understand what that energy is doing. Bitcoin's energy consumption is what makes the network secure. The energy used in mining is what prevents anyone from cheating, from double spending, from taking over the network. It's what makes Bitcoin trustworthy without requiring trust in any central authority. That energy is securing a network worth over $1 trillion. It's providing financial services to millions of people who have no access to traditional banking. It's protecting wealth from confiscation and inflation. It's enabling transactions that cross borders without permission. Is that worth some energy? I think so. But there's more to the story. Bitcoin mining has a unique property. It can use energy that would otherwise be wasted. Miners are economically incentivized to find the cheapest energy possible. And the cheapest energy is often stranded energy, energy that exists in a place where there's no other use for it. Natural gas flares. These are places where oil drilling produces natural gas as a byproduct. And because there's no pipeline to transport it, the gas is just burned off, wasted. Bitcoin miners are setting up operations at these sites, turning wasted energy into productive use. Excess hydroelectric power. Some hydroelectric dams produce more electricity than the local grid can absorb. That excess used to be wasted. Now it can be used for Bitcoin mining, stranded renewable projects, solar and wind projects in remote locations that aren't connected to major grids can use Bitcoin mining to monetize their energy, making those projects economically viable when they otherwise wouldn't be. Far from being an environmental problem, Bitcoin is actually driving investment in renewable energy. It's making green projects viable that wouldn't be viable otherwise. It's turning waste into value. And here's the hypocrisy that really bothers me. The people who criticize Bitcoin's energy use rarely criticize the energy use of things they like. They'll fly on airplanes, run air conditioning, stream videos, and buy products shipped across the world, all of which use enormous amounts of energy. But Bitcoin, that's the problem. This is selective outrage. It's people who don't understand what Bitcoin does, deciding that its energy use must be wasteful because they can't see the value. When you understand what Bitcoin does, when you understand that it's securing financial freedom for millions of people and providing an escape hatch from inflationary currencies, the energy use seems not just acceptable, but essential. The argument, Bitcoin is primarily used by criminals, drug dealers, ransomware hackers, money launderers. It's anonymous and untraceable, which makes it perfect for illicit activity. This argument is based on a fundamental misunderstanding of how Bitcoin works. First, let's be clear. Yes, some criminals use Bitcoin, just like some criminals use cash. Just like some criminals use banks, just like some criminals use cars and phones and the internet, criminals use tools. All tools. The existence of criminal use doesn't make a tool bad. But here's what most people don't understand. Bitcoin is actually terrible for criminals. Bitcoin is not anonymous. It's pseudonymous. There's a huge difference. Every Bitcoin transaction is recorded on a public blockchain that anyone can see. Every transaction ever is visible. If your identity can be linked to a Bitcoin address, and there are many ways that can happen, then your entire transaction history is exposed. Cash is anonymous. You hand someone cash, and there's no record, no trace, nothing to follow. Bitcoin is the opposite. There's a permanent, public, immutable record of every transaction. Law enforcement agencies have become very good at analyzing the blockchain and tracing illicit funds. The FBI loves Bitcoin because it makes their job easier, not harder. This is why sophisticated criminals have moved away from Bitcoin to privacy coins and other methods. They figured out that Bitcoin is actually quite traceable. Now let's look at the data. Studies estimate that less than 1% of Bitcoin transactions are related to illicit activity. Less than 1%. The vast majority of Bitcoin activity is completely legitimate people investing, saving, transacting, and using it as intended. Compare that to the traditional financial system, where money laundering through banks totals in the hundreds of billions of dollars every year. HSBC paid nearly $2 billion in fines for laundering money for drug cartels. Not Bitcoin, a traditional bank. And that's just one case that got caught. If we're going to judge financial systems by their use by criminals, the traditional system is orders of magnitude worse than Bitcoin. But there's a more important point here. This argument, criminals use it, therefore it's bad, has been used against every new communication and financial technology. They said it about the internet. The internet is for criminals and pornographers. Now we can't imagine life without it. They said it about encryption. Strong encryption helps terrorists. Now encryption protects all our communications and financial transactions. They said it about cash. Cash enables crime. That's true, but we don't ban cash. New technologies always get used by bad actors early on because bad actors are often early adopters. They have strong incentives to use new tools before the mainstream catches up. But that early criminal use doesn't define the technology. Bitcoin's future is not as a criminal tool. It's as a global, neutral, accessible financial network. The criminal use is a rounding error in that larger story. The argument, Bitcoin isn't backed by anything. The dollar is backed by the government. Gold is backed by, well, gold. But Bitcoin, it's backed by nothing. It's just made up. Let me unpack this. First, let's examine what it means to be backed by something. The dollar is backed by the US government. What does that mean in practice? It means the government promises that the dollar has value. It means they'll accept dollars for tax payments. It means they have laws requiring people to accept dollars for debts. But is that really backing? The government isn't promising to exchange your dollars for anything specific. They're just promising that they'll keep calling it money. And meanwhile, they're printing more of it every year, diluting the value of every dollar you hold. If that's what being backed means, I'm not sure it's as valuable as people think. Gold is backed by gold, which is a circular way of saying gold isn't backed by anything either. It's just valuable because it's gold. Because it's scarce and pretty and has been valued for thousands of years, that's fine, but that's not really backing in any meaningful sense. Now let's talk about what Bitcoin is backed by. Bitcoin is backed by mathematics. The scarcity is guaranteed by code that anyone can verify. The security is guaranteed by cryptography that has never been broken. The rules are guaranteed by a consensus mechanism that requires majority agreement. Bitcoin is backed by energy. Real electricity, generated by real power plants, is required to mine Bitcoin and secure the network. That energy expenditure is embedded in every Bitcoin. Bitcoin is backed by a network. Hundreds of thousands of nodes around the world are running the Bitcoin software, verifying transactions, enforcing the rules. That network has been operating continuously for 15 years without a single hour of downtime. Bitcoin is backed by game theory. The incentive structure makes it economically irrational to attack the network. Miners are incentivized to act honestly because honesty is more profitable than cheating. Bitcoin is backed by 15 years of operation, a decade and a half of continuous operation, through every kind of attack, every kind of criticism, every kind of market condition. It's been declared dead hundreds of times and has come back every time stronger than before. Is that nothing? That seems like quite a lot to me. Here's the irony. The people who say Bitcoin isn't backed by anything are usually supporters of fiat currency, which is backed by the promises of governments that have broken their promises countless times throughout history. The dollar isn't backed by gold anymore that ended in 1971. It's backed by trust. Trust in a government that has increased the money supply by 40% in just a few years. Trust in institutions that have presided over the loss of 95% of the dollar's purchasing power over the last century. Which would you rather trust? Mathematical code that can't lie, or political institutions that can't stop lying? I'll take the math. The argument Bitcoin is a Ponzi scheme. Early buyers get rich by selling to later buyers. There's no real value being created. Eventually, it will collapse and everyone except the early adopters will lose everything. Or the related argument, Bitcoin is a bubble, like tulip mania, like the dot-com bust. The price is completely disconnected from reality and will eventually crash to its true value of zero. Let me address both of these. First, what is a Ponzi scheme? A Ponzi scheme is a fraudulent investment where returns to earlier investors are paid using capital from newer investors rather than from legitimate business profits. The key elements are promised returns, no real underlying business, and eventual collapse when new money stops flowing in. Bitcoin doesn't promise returns. No one running Bitcoin is telling you that you'll make a specific amount of money. There's no prospectus promising 10% annually. There's just a technology that exists and a market that prices it. Bitcoin has no operator. There's no Bernie Madoff running Bitcoin, taking your money and paying earlier investors. It's a decentralized network. No one controls it. No one profits from it in the way a Ponzi operator does. Bitcoin creates real utility. It allows value to be transferred anywhere in the world without permission. It allows wealth to be stored in a form that can't be inflated or confiscated. These are real functions that real people value. Early adopters of any technology do better than late adopters. That's not a Ponzi scheme. That's how adoption curves work. Early investors in Amazon did better than late investors. Early users of Facebook got more value than late users. That's not fraud. That's the advantage of recognizing value before others do. Now let's address the bubble argument. Bubbles are characterized by prices that rise far above any conceivable fundamental value and then crash back down. The classic example is tulip mania, where tulip prices rose to absurd levels and then collapsed to almost nothing. Has Bitcoin's price risen a lot? Absolutely. Has it crashed? Multiple times. 80% drawdowns have happened twice. But here's what bubble theorists can't explain. Why does Bitcoin keep coming back? Tulips crashed and never recovered. The South Sea bubble crashed and never recovered. The dot-com bubble, well, actually, many of those companies came back and are now worth more than ever. Amazon, Apple, Microsoft, they all crashed in 2000 and are now worth trillions. Bitcoin has crashed 4 times. Each time it has recovered and gone on to new all-time highs. Each bubble has had a higher floor than the previous one. That's not bubble behavior. That's adoption behavior. That's the volatile path of a new technology finding its market. The tulip comparison fails for specific reasons. Tulips had no utility beyond looking pretty. Bitcoin has real utility as a store of value and medium of exchange. Tulips could be grown infinitely. The supply was limited only by time and land. Bitcoin's supply is mathematically capped at 21 million. Tulips had no network effect. Your tulip wasn't more valuable because other people had tulips. Bitcoin has powerful network effects. The more people use it, the more useful and secure it becomes. Tulip mania lasted about 3 years. Bitcoin has been appreciating for 15 years across multiple cycles. Every element of the comparison fails. Here's my question for the bubble theorists. If Bitcoin is a bubble, why hasn't it popped permanently? 15 years is a long time for a bubble to keep inflating. At what point do you admit that maybe it's not a bubble at all? The real bubble, by the way, is the debt bubble, the everything bubble, the bubble of asset prices inflated by endless money printing. Bitcoin isn't the bubble, it's the escape from the bubble. The final argument, and in some ways the most honest one, I don't understand Bitcoin. It's too technical. It's too complicated. I don't get blockchain or cryptography or any of this stuff. I appreciate this argument because it's humble. It's not pretending to have reasons while actually just being afraid. It's admitting ignorance. But I want to challenge you. Is not understanding something a reason not to use it? Do you understand how your smartphone works? I mean, really understand the chip design, the software architecture, the radio protocols, the manufacturing process? I doubt it. I certainly don't. But we all use smartphones. Do you understand how the internet works? Do you understand TCP, IP, and HTTP and DNS and all the protocols that make web browsing possible? Probably not. But you use the internet every day. Do you understand how a car engine works? How about the computer systems that control modern vehicles? How about the oil refining process that produces the gasoline? Most people don't, but they drive cars. We use things we don't understand all the time. That's the beauty of technology. It abstracts complexity away so that ordinary people can benefit from it without needing to be experts. You don't need to understand Bitcoin's cryptography to use Bitcoin. You don't need to understand how mining works. You don't need to understand the code. You need to understand a few simple things. There will only ever be 21 million Bitcoin. That's it, fixed supply, forever. No one controls it. There's no CEO, no government, no central authority who can change the rules or take your coins. You can hold it yourself. With a hardware wallet and a seed phrase, you can take custody of your own Bitcoin, no bank required. It can't be inflated. Unlike dollars, which can be printed at will, Bitcoin's supply is fixed by mathematics. That's really all you need to understand to get started. The technical details are fascinating if you want to dive in, but they're not necessary for basic use. The I don't understand it objection is often really about something else. It's often about fear. Fear of looking stupid. Fear of making a mistake. Fear of the unfamiliar. That's human, that's normal. But it shouldn't stop you from learning. Here's my suggestion. Spend 1 hour learning about Bitcoin. Just 1 hour. Read an article, watch a video, look at the basics, then buy $10 worth. Not enough to matter financially, just enough to have some skin in the game. Then watch what happens. Learn as you go. The understanding will come through experience, not just through study. The worst thing you can do is let "I don't understand it" become a permanent excuse for inaction. Because the world is moving forward whether you understand it or not. And in 10 years, you don't want to be the person who says, "I didn't understand it, so I missed it." So we've gone through the major arguments against Bitcoin. No intrinsic value, but scarcity and utility are value, and the dollar has no intrinsic value either. Too volatile. But volatility isn't risk, and cash is guaranteed negative returns. Governments will ban it. But the trend is toward adoption, not prohibition, and you can't ban math anyway. Uses too much energy. But the energy is securing a trillion-dollar network and increasingly comes from renewable and stranded sources for criminals. But less than 1% of transactions are illicit compared to massive money laundering in traditional banking. Not backed by anything, but it's backed by mathematics, energy, and 15 years of proven operation. Ponzi scheme or bubble. But it's been declared dead hundreds of times and keeps coming back stronger. I don't understand it. But you don't need to understand everything to start learning and using it. Every argument fails on examination. Every criticism has a response. Every reason to dismiss Bitcoin turns out to be based on misunderstanding, fear, or outdated information. But here's the real question, the question I want to leave you with. Why are we so focused on whether Bitcoin will fail? Why aren't we asking whether the current system will fail? The current system is based on money that's being printed without limit. The current system has accumulated debts that can never be repaid. The current system has destroyed 95% of the dollar's purchasing power in a century. The current system requires trust in institutions that have repeatedly proven untrustworthy. That's the system people are defending when they attack Bitcoin. Bitcoin has been working for 15 years. It has never been hacked. It has never been shut down. It has never missed a block. It has grown from zero to over $1 trillion in value. The current system has been failing for 50 years since the gold standard ended in 1971. Inflation has eroded savings. Wages have stagnated in real terms. Wealth inequality has exploded. Financial crises have become more frequent. And yet people ask, will Bitcoin fail? Maybe we should be asking, will the dollar fail? Will the current system fail? Will the institutions we're trusting fail? Because the track record isn't great. The critics of Bitcoin are often defenders of a status quo that has already failed most people. They're attacking the new thing while ignoring the ongoing failure of the old thing. They're worried about Bitcoin's volatility while ignoring the guaranteed erosion of purchasing power in cash. That's backwards. That's defending the indefensible while attacking something that's actually working. I'm not telling you that Bitcoin is guaranteed to succeed. Nothing in life is guaranteed. Bitcoin could face challenges I can't foresee. New technology could emerge. Something could go wrong. But I am telling you that the arguments against Bitcoin are weak. They're based on misunderstandings. They don't hold up to scrutiny. And I'm telling you that the arguments against the current system are strong. They're based on math. They're based on history. They're based on observable reality. So when someone tells you Bitcoin will fail, ask them, why do you have more faith in a system that's been failing for 50 years than in something that's been working for 15? Ask them to explain their confidence in unlimited money printing. Ask them to explain why guaranteed purchasing power loss is better than volatility. Ask them to explain why trusting politicians is better than trusting mathematics. Because when you really examine it, the critics are the ones with explaining to do, not Bitcoin. Do your own research. Think for yourself. Don't let critics who haven't done the work tell you what to believe. And if you can't find good answers to the arguments I've laid out, if the case against Bitcoin really doesn't hold up, maybe it's time to stop listening to the critics and start paying attention to what's actually happening. Bitcoin has been dying for 15 years, and it's never been stronger. At some point, you have to accept the evidence in front of you. The critics have been wrong over and over and over again. Maybe it's time to stop believing them.